The future is what we make it. We can make it.
Hello everyone, and welcome to a special episode of Real Vision Live as part of Real Vision's first virtual event, the Crypto Gathering. It's my pleasure to introduce today's interviewer and interviewee. We are joined by Marty Bent and PlanB. Marty is the editor-in-chief of the daily newsletter Marty's Bent and host of the popular podcast Tales from the Crypt. He has interviewed hundreds of crypto experts, from academics, authors, and thought leaders to the developers and investors on the front lines of building out this new and exciting space. Today, Marty is sitting down with the infamous and pseudonymous PlanB, a mysterious Twitter personality at 100 trillion USD who spends his days managing a multi-billion-dollar balance sheet as a Dutch institutional investor. PlanB sent shockwaves through the space with his stock-to-flow model that he uses to quantify the scarcity of Bitcoin and project future prices as Bitcoin becomes more and more difficult to mine. Without further ado, I hope you enjoy this conversation with Marty Bent and PlanB.
What's up? It's Marty Bent here with PlanB. Let's talk about something very exciting. How do you value Bitcoin? How does one value Bitcoin? It's an alien technology. It was dropped on the world just over 11 years ago. It's a distributed peer-to-peer cash system with no central authority. It's not controlled by any company. It doesn't have any cash flows. So how the hell do you value this asset? PlanB, I'm very happy to be sitting down with you to speak about this subject today.
Great to be here, Marty. I'm excited as you are. Valuation. It's my hobby. It's my profession. I'm an institutional investor in Holland, and so when I jumped into Bitcoin, the one thing that was missing was a valuation model, and since that is a bit of a hurdle to invest, I decided to research and make one. There's more people doing it, but I started out looking at the current models. So basically, if you value something as an investor, it's mostly cash flow models, bonds, stocks. It's all cash flow models. But with Bitcoin, you don't have any cash flows. So I had to look for something else. And if you look at really the core thing of what Bitcoin is, it's the invention of digital scarcity. And that's really a weird thing. It took me a while to really get it, and because something that's digital, like a text or music or a video, it can be copied, and so it's not scarce. And how do you make something scarce and digital? Somehow Satoshi Nakamoto did it by using a couple of existing technologies and adding one a new technology. So he used peer-to-peer networks instead of a client-server network. He used digital signatures, and he added something new. He added hash-based proof of work, and that together made something digital and scarce. And then the next question was how to quantify it. How do you quantify scarcity? Luckily, there was a whole gold community, a precious metal community, I should say, that already did this, because they talk about stock to flow when they compare silver and gold, for example. And actually, the first time I heard about stock to flow was Professor Fekete. He wrote about it in a gold context. He wrote about monetary assets and non-monetary assets, and later the In Gold We Trust report, that's from Incrementum, the gold fund in Liechtenstein. They use stock to flow as well in their yearly report. That's the first time I really I got to know stock to flow, actually. And then, of course, Saifedean Ammous, we all know him from the famous Bitcoin book, the Bitcoin Standard. He used stock to flow to compare Bitcoin with gold and silver in terms of stock to flow. And that's really how I got it. And so stock to flow is a measure to quantify scarcity. And if we look at the stock to flow of gold, for example, it's 60, and it means that there's about 60 years of production in gold above the ground. and silver has a stock to flow of 33, and Bitcoin has a stock to flow. Well, it had its stock to flow of 27 before the halving last month, and now it has doubled to about 55. Now, the nice thing that you see with this stock to flow is that it relates with market value. So gold has the high 60 stock to flow. It also has a high market value of 10 trillion, and silver with stock to flow 33 has about market value of half a trillion, and Bitcoin, of course, a little less, 200 billion. Um, but but if you plot those stock to flow and market values on a chart, you can see an amazing straight line, and that was the skeleton of the model, where I for the first time had a evaluation model for Bitcoin.
Yeah, and so you just mentioned the recent halving that happened in May, and I think this would be a good point to sort of explain what the halving is and how it affects the stock to flow model. So for any of you viewers out there who are unaware, every 210,000 blocks, the reward subsidy that is distributed to miners on the Bitcoin network gets cut in half. It started out at 50, block 210,000 went down to 25, 420,000, 12 and a half, and then last May it hit block 630,000 is now the subsidy is at 6.25 Bitcoin per block. So how does this fit into the stock to flow model, and how does it impact the valuation model?
Yeah, it's actually very interesting that the stock to flow scarcity, if you will, of Bitcoin increases every halving. It doubles every halving, and that has an impact on value if you follow this stock to flow model, because where it was in the neighborhood of silver stock to flow, it now comes close to gold, and the enormous jump in market value should be reflected somewhere in the next couple of years. It doesn't come right after the halving. We've seen that in the past as well. It takes months or maybe a year, 2 years. But yeah, the great thing about doubling and a stock to flow is that it will have an impact on valuation as well.
Yeah, and that's a common trope that you hear leading up to the halving, whenever there is one, is that the halving's priced in. And that's always a strong debate that goes on in between finance Twitter and Bitcoin Twitter is the halving priced in? And you wrote a nice piece on the efficient market hypothesis and stock to flow. And I think it would be interesting to hear you expand on that topic a little bit. Is the halving priced in months leading up to it?
Yeah, actually, that's the best Steelman argument against this stock to flow model, that it shouldn't be there. If the market is really efficient, then everybody knows what the stock to flow will be a year from now or 10 years from now. It's well known. And if you have the stock to flow model formula, you should be able to deduct the price that it will be. So why doesn't Bitcoin rise towards the price that it should be a couple of years from now? And yeah, that's a very interesting critique on the model. But yeah, what we see is that there's also a lot of risks in the market about the halving, about governments banning Bitcoin, about manipulation, about the whales selling and buying. So I think this model and well, the few people that know this stock to flow model and use it actually, although it's becoming more and more, is yeah, surrounded by risks that people also see. So and they hold the price back. I think that will be the context. But yeah, it would be really interested to see what the next 1 or 2 years will bring. And if it will follow the stock to flow model, I think we can sort of conclude that it wasn't at least 100% efficient, the market.
Yeah, and you mentioned outside factors that sort of play into the valuation of Bitcoin. Right now, we currently have governments around the world and central banks around the world printing obscene amounts of money. Quantitative easing is back. It seems like QE infinity is here. And so what does this mean for the value prop of Bitcoin and its digital scarcity?
Yeah. And that also plays into the correlation and uncorrelated asset aspect of Bitcoin, because, yeah, next to a fundamental value and a model that gives a number, the other narrative among investors is that the asset of Bitcoin is uncorrelated to other assets. And normally, if you do a correlation study, you look at the returns of all those assets. So if you look at monthly or quarterly or yearly returns of Bitcoin and compare them to the returns of stocks or bonds or gold, basically every other asset, you'll see zero or close to zero correlation. So that's where the uncorrelated asset narrative, and it's more than a narrative, the fact basically comes from. And of course, that's for investors very important, because adding Bitcoin to a portfolio being uncorrelated means there are diversification benefits to be made. Now, the only thing that happened last couple of months, of course, was the coronavirus and the crisis and the drop in the stock market, where everybody expected this uncorrelated Bitcoin to go up or at least stay where it is. It also went down. So the whole uncorrelated asset thing was questioned, and rightly so, because it was not a safe haven in this coronavirus drop, and it was not uncorrelated as you would expect. But there's more to it than that, because if you look at the returns, then you don't see the whole picture. If you look at price levels of Bitcoin and price levels of stocks, of S&P 500, for example, you normally wouldn't do that in a correlation study, but there is one exception if the series are co-integrated, and that seems to be the case in Bitcoin stock relationships. So stock to flow, or I mean, the S&P and Bitcoin price levels are for the last 10 years correlated and co-integrated. And that's very significant, because it turns out that it means, by the way, that they stay together. So they can wander off maybe for a month or 2 months, but they always go back together. They revert to each other. That's what co-integration means. And we can indeed see, if you look deeper, that not only in March this year with the corona crisis, they both went down, stocks and Bitcoin. That was also the case at the end of 2018, when Bitcoin had this big drop to the all-time lows, but also the stock markets were at their lows, because the Fed was considering stopping quantitative easing, so they were tapering. And in fact, you can also see it in the beginning of 2018, when the U.S. took the anti-China measures, the trade wars. That's when the stock markets went down as well, and Bitcoin did go down as well. So you can see this, in fact, last 10 years on multiple occasions, that the stock market and Bitcoin move in tandem, and they stay together and are indeed statistically co-integrated. And that's not to say that an S&P move is the same as a Bitcoin move, because in fact, if the S&P goes 2x, the Bitcoin goes 400x. So it's really a different level. But the fact that they are co-integrated and stay together, well, that means that they're less uncorrelated, if you will, and that there's less diversification benefits to be made. So that's in one way or that could be bad news. On the other hand, it also means the co-integration, that there is some underlying factor that drives them both, and that is the quantitative easing, probably, because that's the dominating thing right now in markets. So central bank money printing is pumping all assets, stocks, Bitcoin, bonds, real estate, everything. And I guess that's what we're seeing in this co-integration relationship. And it also points towards a very core Bitcoin thing as well, And that was the very reason why Bitcoin was made in 2008, in October 2008. That was at the height of the global financial crisis, and 45 days after Lehman default. And Satoshi Nakamoto, the inventor of Bitcoin, is very clear about why he did it. It's one of his emails writes about the problem we have with our current money, and that problem is debasement. We see that even the Romans did that. They debased their money 2,000 years ago, but certainly in 2008, when the banks had to be solved, the central banks embarked on a quantitative easing mission, a printing mission, and that is the thing one of the things why Bitcoin was made. And in fact, we're sort of seeing that with the Corona crisis right now again. So in a way, it's not a surprise that stocks and Bitcoin move together and stay together. So in the end, I think this is sort of good news, although we have to get used to this message that the assets are not uncorrelated. I think the message is okay. They stay together, and the good news is that Bitcoin at least has aligned incentives with the Federal Reserve and other central banks, because as long as the quantitative easing goes on, and then it's very realistic that Bitcoin and stock markets stay together.
Yeah, the Fed ruling the market seems to be consensus around the world right now, and that seems to be leaking into Bitcoin, as you just described. And that's brings to the surface a very interesting question. What is the investment case for Bitcoin if it has co-integration with these movements? So how are institutional investors looking at this from your perspective? What metrics are they looking at? How do they compare Bitcoin to other assets, especially considering the environment of money printing that the world is currently amassed in? How should institutional investors look at Bitcoin compared to these other assets?
Yeah, that's one of the questions I wrap my head around. So as an institutional investor myself, I am into these discussions, and I can give you guys a little peek of what we talk about. It's not very positive. It's not like we as Bitcoin thought leaders, we like Bitcoin, we know everything about Bitcoin, but for an institutional investor, and I'm talking about balance sheets of banks and pension funds and insurance companies, there's regulation, there is reputation, and there is a lot of risk that you have to manage. So, and capital. So the first time I mentioned Bitcoin in our company, there were basically two reactions. It was, oh, well, it's nothing because it's a Ponzi scheme, it's a bubble, it's like tulips in the 1600s. Nothing for us as an investment. And the other one was, well, even if it were a nice investment, governments won't allow it. They ban it. So that was case closed. And that was about a year ago. But luckily, that changed a little bit. I see it in reports in the market as well, like the recent Fidelity report that interviewed some institutional investors, and about a third was invested either through companies or Bitcoin or other coins, and a third is quite a lot. We also see it in the gold community, where the guys from Incrementum, from In Gold We Trust, have a fund that is both Bitcoin and gold together in one fund. So that's where you have the gold and the digital gold world come together. We still see Goldman Sachs, for example. They had a report 2 weeks ago that still talked about bubbles, Ponzi schemes, and tulips. So they're, for whatever reason, not that far. Although I think all the main players that are on the stage today, like Novogratz and Raoul Paul, they all have a Goldman background. So I guess all the Bitcoin-minded people are sort of left Goldman. But it was very remarkable that they were still very into this Ponzi bubble, etc. And but then again, companies like Morgan Stanley were pretty positive, servicing Bitcoin companies with banking services, and also Bloomberg that has used the Ponzi and tulip narrative a lot. They were quite positive as well in their recent publications, talking about a maturing asset. And yeah, well, that's what I see at our company as well. So they're, especially in Europe, faced with negative interest rates. Looking for yield becomes harder and harder. So Bitcoin is one of the exotic investments, but yeah, one of the opportunities that is on the radar. Basically, I can see 4 ways of investing in it as an institutional investor. And those are the 4 ways that we talk about it as well. So the first way is very simple, buying Bitcoin companies. So it's not buying Bitcoin outright, but buy the companies that are exchanges or other infrastructure around Bitcoin. It's basically a fintech play, a venture capital play, and it's a familiar play for institutional investors because they buy shares of companies all the time. And yeah, there's not much risk maybe there, but there's still, well, it's not without risk either, because you see with the Bitcoin companies a little bit what you saw with the internet companies in the beginning as well, that if you put .com behind your name, the values would rise sharply. And right now, if you put blockchain on your name or do a project with blockchain, that has a very positive effect as well. So it's, well, that would be the first step, I guess. And that was the first step that we were thinking about as well. The second way of investing in Bitcoin, of course, is just buy it and hold it. Buy and hold Bitcoin. And that's I think the most common way to get direct exposure on Bitcoin. But that has very high risk. As we all know, Bitcoin has a tendency to crash once in the 3-4 years. It goes down, what is it, like 80%? And that's
tends to take a deep dive every once in a while.
It does, and it's too much for most institutional investors to stomach 3 times 80% in 10 years. On the other hand, if you look at the Sharpe ratio, so that's the return divided by the risk, it's positive and it's above 1. And I've never seen that in my life before. A Sharpe ratio is this high. So the average return of Bitcoin was 200% last 10 years. And okay, it was mainly in the beginning years, but if even 150%, if you look at the last 8 years, divided by, well, this 80% risk. So the implied volatility in options, the risk in the market is priced at 80%. Well, that gives a positive number. So that's, from an investor point of view, very attractive. A Sharpe ratio above 1. So, okay, it still has the big volatility, but you can take a small investment, like 1% or a couple of percent. The other play, the third play, is much lower risk and actually very familiar to investors, is a future play. Since we have a mature future market in Bitcoin, you can do a cash and carry trade where you buy the Bitcoin and sell it at the same time in the future. So you future sell it at 1 month or 2 or 3 or whatever month. And the futures are in contango, meaning that the future price is higher than the current spot price. So if you buy now for, say, 9,000 and you sell next month for 9,100, you make $100. You make like 10% profit in 1% profit. I'm sorry, in a month. So that would take you to about 10% profit per year with a relatively low risk. And that's a very familiar play that we do with gold as well. Gold futures in the commodity funds, etc. So, but to give a comparison, in gold you would make 1% per year, where with Bitcoin you would make 1% per month, so 10% or 12% per year. It's very lucrative, especially for institutional investors that are used to, well, let's say 3 to 5% return on a very conservative portfolio. 10% is quite high. And the fourth strategy is also very interesting. I've seen that in funds as well. It's to embrace the volatility that's there in Bitcoin and see it as an asset and do an options-based strategy. So there's very mature option markets these days as well. And you could do that by doing a covered call writing strategy. So you would buy the Bitcoin and you would sell a call option at the same times. And because the volatility is so high in Bitcoin, 80%, like we said before, that's also what you see in option prices. So the call option would be like 40%. So you would basically buy the Bitcoin, sell the call option for 40%, and you would basically cap your profit at 40%, and meanwhile also reduce your downward risk, because if the Bitcoin goes down 80%, say, you still have that 40% call option premium. So you would have a very, very interesting strategy right there that would yield even a little bit higher than the futures strategy, I would say. So yeah, those are basically the four options that I see as well, a thing that institutional investors could do, and very interesting to see what they're going to do actually.
Yeah, no, it will be interesting. Volatility is always something that makes me laugh when people complain about Bitcoin's volatility. The world is attempting to price a new monetary good, which doesn't happen very often. So if you're able to stomach the volatility, it is a very good risk-reward ratio in the long run. And so I guess it all comes down to what fund mandates are and what their time horizon is. Over what time horizon are they looking to get exposure to this asset, and how long are they willing to have exposure? And so, like you mentioned, if you're willing to buy and hold and stomach the volatility, it tends to pay off in the long run. And one of my favorite charts to look at historically for Bitcoin is that everybody pays attention to the high watermarks in price. But if you actually look at the yearly lows in price from year to year, I believe there's only been 2 years in the 11-year existence of Bitcoin where it's made a lower low, which is a unique way to look at the pricing of Bitcoin.
Yeah, absolutely. And especially high volatility can be managed. It can be hedged. It can be, you can size your position. So I don't think in the end the very high volatility will be an issue. It might even be an asset, something they're actively looking for with option strategies.
Yeah, and there's more and more options and futures products coming to market as time comes on. So we're watching this market develop and mature pretty rapidly, in my opinion. And when you talk about a fundamental analysis, which is something interesting that happened last week that came to the surface, and something that you mentioned, a lot of boardrooms discussions revolve around, or the fact that governments may clamp down on Bitcoin. But we saw, whether you like it or not, we did see a government openly adopt Bitcoin last week in Venezuela. They're accepting Bitcoin payments in a self-sovereign fashion using BTC Pay server for passport services. And it's funny because they're not allowed to accept debit or credit cards, but they can accept Bitcoin. And whether or not you are okay with Venezuela accepting Bitcoin as payment, it shows that the network is working, because at the end of the day, on top of the scarce nature of Bitcoin, the other value prop is its censorship resistance. And Venezuela being able to accept Bitcoin in a self-sovereign fashion, and nobody can stop them from doing that, sort of drives home the underlying value of its censorship resistance, which should be bullish as well.
Oh, absolutely. That's a very interesting development in Venezuela, and even in the US, where of course they banned gold before in the 1933, I think, but what you in fact see in the US is more regulation than banning. It's more laws, anti-money laundering, and I can understand that. But then the legal exchanges and regulated exchanges on futures and options is incompatible with the ban, I guess. So the more you see these markets mature, the less I think there is a risk of government banning. And it's funny to see, by the way, that in the Bitcoin community, the futures and derivatives markets are seen as something negative, something that, that's a tool for manipulation and whales and governments to suppress the price. As an institutional investor, I would say it's a sign of maturity. Markets getting mature, giving more entries and exits opportunities for investors, and even the drop in price in 2018 that was said to be because of the futures market. That's a story you hear a lot. I think if you actually look at the prices in the beginning of 2018, yes, Bitcoin went down, but the stock markets went down as well. So I guess that's the co-integration thing again. It had more to do with the U.S. taking anti-China measures and the trade war than it had to do with futures being the cause of Bitcoin price decline. I think it's a very promising and very good network effect within a maturing asset like Bitcoin.
Yeah, and to add to that, like, it was in retrospect pretty obviously a blow off top. You had the infrastructure, the on and off ramps for Bitcoin couldn't really handle the amount of adoption that was attempted at that point too. So the infrastructure didn't seem ready for that inflow of funds at that given point in time too. So a price correction, yes, it could have been a multitude of things. The U.S. going against China, simply the infrastructure not being ready. A lot of people like to point at the futures markets, but there were many factors that were at play at that point in time. And it'll be interesting to see what happens if there is another bull market ahead of us. The infrastructure seems to be much more mature. There's many more futures products and hedging products that have come to market. Mining is becoming much more sophisticated. And I think this would be a good time to transition. And is why is Bitcoin able to adopt this valuation model alone? There's thousands of cryptocurrencies. Why is Bitcoin more valuable than them? How come they are not seeing value creation like Bitcoin is?
That's a very interesting question. I get that a lot, and I understand the question as well. I think it comes back to the scarcity. So Bitcoin is scarce, digitally scarce, because it is a really peer-to-peer network. It doesn't have a client-server network. There's no one with a server that can that has power to do anything on the network. Everybody is equal. It's a peer-to-peer network, and the same with hash-based proof of work. You have a lot of miners, you have a lot of hash power, you have billions, I guess about 5 to 10 billions in infrastructure, in mining infrastructure that secures the network. And a thing that a lot of people don't get or forget is or just don't know is that if you make a copy of Bitcoin, if you make an altcoin, you can copy the code, you can copy the software very easily, because it's all open source, it's all out there. But you cannot copy the peer-to-peer network, all the nodes. You cannot force people to run your software. And you can also not copy the security, all the miners and all the equipment, all the billions in investing. It's just not, you're not able to copy that. So the scarcity is there because of the real decentralized network, the real secure network, and in that way the scarcity. So even if an altcoin or a fork of Bitcoin or a new Bitcoin would have the same stock to flow as Bitcoin itself, And according to the model, it should have the same valuation. I would really be surprised if it would have the same valuation, because it's probably not as scarce as Bitcoin in terms of what I just said, peer-to-peer nodes, hash rates, proof of work, and yeah, a lot of altcoins don't even have nodes. They have a server, a client server network, or they don't have proof of work. They have proof of stake or something, or they don't have hash rate. And yeah, I think the market recognizes that.
No, I think one of the fundamental indicators to look at, and goes underscored by many in the institutional space, is hash rate. Hash rate's been going up exponentially, and as somebody who's in the mining industry, and just thinking about the capital expenditure that goes into creating a mining operation focused on Bitcoin, Bitcoin SHA-256 Hashcash algorithm specifically, it's hard to imagine any competitor in the cryptocurrency space really matching Bitcoin's investment in proof of work specifically. The amount of infrastructure that's been built out, the amount of intellectual power that's going into creating the chips that make the mining world go round, and the fact that Bitcoin mining started to integrate itself pretty closely with energy producers. It's hard to see a competitor, at least from my perspective, gathering that type of network effect as well. And that'll be interesting to see moving forward, is specifically the bridging of Bitcoin mining and the energy sector. And you're going to get to a point where Bitcoin miners are the energy consumer of last resort.
Yeah, I totally agree. It's all about the network effects, and maybe to add, because this is the crypto gathering, it's also about the different communities, Bitcoin maximalists, if you will, and also altcoin people. It's important to understand that the scarcity thing and the valuation model that I made, but the scarcity thing is a real Bitcoin play, and the same with the debasement and the quantitative easing thing that Satoshi Nakamoto mentions is really a Bitcoin thing. And that's not to say that altcoins don't have value at all. It's just not based on scarcity and the big, quantitative easing debasement of currencies play. So it's a bit like in the commodities world, at least that's how I see it. You have also palladium and platinum. They're also not scarce in stock to flow terms. But they do have tremendous value. They have value because they're used. They're used in cars, in exhaust of cars, and so there's no stock because all the production is used in the cars, and they're not hoarded. They're not stocked, and they don't have stock to flow. So in that sense, they don't play the monetary metals game like gold and silver do.
Yeah, it'll be interesting to see how and if they're able to accrue significant value from a token perspective, right? That's, in full disclosure, I'm very skeptical that many tokens outside of Bitcoin will accrue much value, and it's simply because why? How do they accrue value if they're not money instruments? And if we truly have a open competition for money, it's not central banks and governments dictating what currency you use, and now we have Bitcoin on the market as well, and people can opt into that system. It's hard to see how that's not a winner take most, but we shall see how it plays out. Obviously, a lot of these networks have accrued a lot of value, and it will be interesting to see if Bitcoin can implement a lot of the things that give those networks value in the future.
Yeah, same here. I'm in it for the scarcity and the valuation of this scarcity and the sound money game against debasement that we're seeing at the moment. I think it's maybe the point in time that we're now it's maybe you could compare it with a perfect storm. It's on the one hand, Bitcoin is getting scarcer and scarcer with the halving just last month. On the other hand, the global financial crisis and corona crisis have triggered a quantitative easing wave of unimaginable proportions. So I think even Satoshi Nakamoto couldn't dream of this kind of money printing and debasement when he made the Bitcoin, and they come together right now. So yeah, it's unbelievably interesting time to live in.
Well, maybe that's what we can end it on. We have 5 minutes left here, I believe. And so with all this going on, what is the end game? Like, obviously, Bitcoin is very co-integrated with other assets at the moment, but do you envision a point in time where it does truly decouple? What would that look like, and how would you position yourself for that?
Yeah. It's funny that the intro talk with Raoul and Niall, they were talking about the reserve currencies and their being the Dutch guilder at one time and the British pound at another time and the US dollar right now. And I think they don't they have a limited life. So I think the dollar has been the world reserve currency for about 100 years or maybe more. And that will not go into infinity. So I think central banks knew perfectly well that when they entered quantitative easing, when they jumped onto that slope of quantitative easing and printing, that there was no point of, that was the point of no return. That's not something you can revise. Okay, they tried it with the tapering. They tried it with raising interest rates. They crashed the economy. So they're not going to do it even after the elections in November. So I think they have to stay the course and go on this path. Not only the U.S., not only the Fed, but also Europe, the ECB, the Japanese central bank that have been doing it for much longer than the U.S. So yeah, I think that's the road forward, and somewhere around, well, I don't know when, 5 or 10 years, maybe 15 years, there will be a point that some people just don't accept a euro or a dollar for their work or their property. And yeah, I'm a fan of the Roman history. How does an empire as big as the Roman Empire come to an end? And debasement was a large part of that. Because in the beginning it was 95% silver in the denarii, and it ended up being 0% or close to 0%, and that's coincided with the end of the Roman might. So, yeah, I think it all starts, and same with the Romans. It was the soldiers that had to be paid, and that stopped accepting the denarii, the debased denarii, and they just asked for gold. And I think right now, you see that in some markets, especially in the developing country markets, the countries that are hyperinflating. You saw it in Iran, you see it in Venezuela, you see it in Turkey right now. So, yeah, I think that will be the real inflection point.
I agree, and I think especially for us Westerners, it would be foolhardy for us to discount what's going on in the developing world. And we've seen the developing world sort of kickstart, adoption of new technologies with cell phones. That's one example of a technology where instead of getting landlines in everybody's hands, people in sub-Saharan Africa jumped to cell phones immediately and just jumped right over landlines. And this could happen with Bitcoin as well. As I mentioned earlier, Venezuela is accepting self-sovereign payments in Bitcoin. Lebanon is obviously going through a hyperinflationary crisis at the moment, and it would not be surprising to see individual workers and companies accept Bitcoin at a discount, or give their services away at a discount to accept Bitcoin. And so for me personally, looking out at the world, in the developing world specifically, these are the types of things I'm looking for. We're seeing examples of individuals sort of leapfrogging the banking system altogether and going straight to Bitcoin in places like El Salvador, Venezuela, and other developing countries.
Yeah, and we can add on top of that it's Bitcoin makes a perfect collateral. So you probably earn the most interest on Bitcoin as collateral going forward, and that would make Bitcoin a much wanted thing.
Yeah, and it'll be interesting to see too with all this QE. Does Bitcoin, in your mind, succeed better, have a better chance of success in a deflationary or inflationary environment, or how does it react in each environment in your mind?
Yeah, difficult to say. But what I do see in Europe, where we have negative interest rates. So I live in Holland, minus 0.5% interest rates. Same in Germany. The point where in time where the interest rates go negative on saving exchanges. So when normal people don't get interest on the saving accounts, that's the moment in time where people start thinking about alternatives like Bitcoin. At least in the Netherlands, what I've seen, and especially also among my friends and colleagues. So it's yeah, that if that negative interest rate environment ever comes to the US, that will be huge for Bitcoin.
They're trying to hold back as long as possible. But it is interesting looking at Fed minutes and tea leaves more recently. They've completely dropped even broaching the subject of raising rates at some point in the future. They don't even approach that subject yet. And Chairman Powell came out a couple of weeks ago and said that they will be supporting markets for at least years to come. How many years? It's a big question. And so it'll be interesting to see. You brought up the fall of the Roman Empire due to their debasement of the dinar. Like, does Bitcoin provide a unique opportunity for us as living right now to have a sort of safety net in a self-sovereign distributed monetary system?
Yeah, fully agree. And in fact, that was the reason why I myself came to Bitcoin. I learned about. I actively was searching for something that would do very well in a negative interest rate environment, and would be some sort of hedge against quantitative easing and debasement. And that's how I found Bitcoin at the time.
Yeah. And so what's next for you? What are you research-wise? What are you looking at? You had the stock to flow cross asset model come out. I really liked your thoughts on the transitionary nature of these assets, transitioning from just something that was a pet project to something that became a payment system to a financial asset. How does Bitcoin's evolution look to you from here?
Yeah, so one of the things that happened after publishing the second incarnation of this stock to flow model, the stock to flow X model, was that I was approached by real estate investors and diamond investors, because those were not on the model yet. So I have a lot of data right now of diamond markets and real estate markets in both the US and Europe. So I can. I'll be able to add them to the model in I guess 2 or 3 weeks time, and that will be really spectacular because maybe I can give a hint already, but they fit very well on the line with gold and silver, so they give extra confidence that this stock to flow framework is useful for valuation. So that's one thing, and the other thing is that I said it before, I want to be the bridge between the institutional investment world and Bitcoin on the one hand. So I'm perfectly in a perfect place working for an institutional investor in the investment team and being a Bitcoin a guy to bridge those two. So I'll give it a shot for the next mandate round. It's in Q3, Q4. I'll make a formal proposal and see if we can add a very small allocation, get a very small mandate, and make this thing happen.
Hey, let's get their toes wet. Thank you for doing all you're doing to help educate this class of investors on Bitcoin specifically. I, as well as I think I can speak for you, believe it's a revolutionary technology that many people should be paying attention to if they're not already. We've got to wrap it up here. Where can we learn more about what you're doing, find your writings, and find you on social media?
Yeah, if you want to know more about the articles, the research, the model, I'm on Twitter, PlanB at 100 trillion USD at 100 trillion USD, And I have a website. It's planbtc.com, planbtc.com, and all the articles, all the podcasts are on there. And yeah, please reach out because if you have any questions, I really like it, and looking forward to discussion.
Yeah. Well, thank you for your time this evening where you are, this afternoon where I am. Really had a great conversation. Really enjoyed it.
Thank you, Marty.
Thank you. Have a great night.